Happy Monday, everybody. I hope you had a great weekend. Funny how we had an early spring in Chicago and Northern California just got 7 feet of snow, in case you didn't already think the world was weird. Today is March 4th, 2024, and this is your Monday market update. These days, we're not at a loss for news, so I'll stick to the script. We'll review last week's market and preview the big week ahead. For those of you playing at home, and it is the first week of the month, also known as what? Okay, just testing you. We got the answer in a few minutes. Last week started a bit directionless on Monday as the market was digesting gains from recent moves, less than stellar treasury auctions, government shutdown worries, cautious comments from Jamie Dimon, and weak new home sales. The market tried to stabilize, but negative headlines from the Middle East took that away. The Dow was down less than 1/4%. The S&P was down about 1/3%, and the Nasdaq was down like the Dow just a bit. Markets opened flat and drifted a bit lower on Tuesday with eco data in focus, durable goods missed estimates, housing in line, consumer confidence below estimates, and Goldman CEO Solomon this time pushing back on the soft landing ideas like Dimon before him. Stocks did reverse the minor negative move and moved into the green by the end of the day, even ever so slightly. The Dow was still off just about 1/4%. S&P was was up just under 1/4%, and the Nasdaq was up about 1/3%. No major direction on Wednesday as the holding pattern ahead of Thursday's coming core PCE number. Remember, that's the one that the Fed watches most. At least that's what most, including Chicago Fed President Goolsbee, say. Slight revision lower on the Q4 GDP. Very rear view mirror, but it was notable. A lot of Fed heads talking, including Bostic and Williams, who still believe that there's work to do to get inflation back to that 2% target. But that is not the only message. A lot of Fed speak, and they are not all singing the same tune. We'll have to see how this plays out. Remember, I do believe that the Fed does this on purpose to see what the markets will think of the different opinions. Not a lot of other news on the wires, all waiting for the eco data, that PCE. The Dow was down just a bit, S&P down under 1/4%, and the Nasdaq was down about 1/2%. Happy leap day, or as it was for the bulls, PCE came in pretty much on target on Thursday. That gave the bulls the risk on green light. The number is the last one to bring everyone back from the major inflation fears that came from the CPI and the PPI. Market did pause for a breath when pending home sales missed huge, but back at it, and the buying continued. I do want to note that as we have been doing, there are now just the CPI. They're now not just the CPI and core CPI, PPI and core PPI. We have the super core and the super duper core. Not sure what else, but we can see the super core PCE. That number was up big, back to levels close to where we saw in December 2021. Markets not paying any attention to this. The Nasdaq did hit a new record close, first time since November 2021. February ended with the fourth positive month in a row. S&P had its best February since 2015. Overall, the Dow was up just under 1/4%, S&P up 1/2%, the Nasdaq was up just under 1%. That was for the day. For the month of February, the Dow was up over 2%, S&P up over 5%, and the Nasdaq was over 6% higher. Markets did open flat on Friday, but that was short-lived. The rally resumed. S&P through the 5,100 mark. As bad news was good news, ISM manufacturing and consumer sentiment disappointed. Dell's earnings headlined in tech. If there was a day not to talk about that end stock, that's the talk of everyone. But by the end of the week, the markets were still at full force, no gliding into the weekend. The Dow was up 1/4%, S&P up over 3/4%, and the Nasdaq was up almost 1.25%. For the week, the Dow was down 0.1%, S&P up just under 1%, and the Nasdaq was up about 1.75%. Pretty intense way to start March in like a lion. We'll see how that goes. Wrapping up the week, there are big calls all over. Citi says there's more upside to come. There are those that are calling for the big fall. If you have an opinion, I imagine that it is shared by someone who will be on TV, radio, or in print sometime soon. Let's look into the coming week. Did you get the trivia? First week of the month is Jobs Week. So let's start there. We'll get JOLTS and ADP on Wednesday, jobless claims, and now the watch continuing claims on Thursday, and the non-farm payrolls, the big one on Friday. In the middle, we'll get all kinds of Fed heads, Harker, Barr, Daly, Kashkari, Mester, Williams, and all of that will play second fiddle to Powell, who will testify in front of Congress again. Wednesday is the day to watch. He'll release his written comments. Those same written comments will come out Thursday, so nothing to see there. House versus Senate, also watch for the questions on both Wednesday and Thursday. There will be some eco data and Beige Book and Services PMI, factory orders. For those still paying attention, the State of the Union will also be given on Thursday night, and we'll get a bunch of earnings, Costco, Target, Kroger. I'll wrap up today with a note on the momentum. Momentum is still strong on the technical side and the fundamental side, but it is not without headwinds. Like so much these days, in my opinion, just because you ignore the facts does not make them go away. This market is looking at everything with rose-colored glasses at this time. Good news is good news, bad news is good news, and really bad news or worrisome news is pretty well ignored. There was some negative news last week. There was some hot services inflation in the core PCE. Durable goods report were ugly. Jobless claims were up. Inflation is coming back, is one fear, or just if it's maybe just sticking around. The share of U.S. income spent on food is at a 3-decade high at over 11%. Inflation is up about 19% since the pandemic, but grocery prices are up 25% since the pandemic. This is on the minds of a lot of people, not just you and me, but the Fed and even the regulators who are looking at grocery merger plans. All that is around, but the bullish tailwind is leading the way. Stable growth, falling inflation, coming rate cuts, and AI future gains. Add that with really high valuations by most measures, signs of slowing growth, that could be the concern. But in order for this market to go down, something does have to turn the winds more. This does not mean that it will or won't happen soon. It's just that small news will probably not do it. For now, we need to keep a good watch on things, stay focused on your goals. As I continue to say, this is not a matter of which way the market goes or when. It is a matter of what your goals are. How do we position your investments in your financial plan to allow the best chance of success? Please check in on Friday for the planning video and reach out with any questions. Have a great week.